Hello, this is Mitch King with the October 15th Daily Stock Picks newsletter. This is the chart of the NASDAQ Composite. This is the run that we had from Friday. Right there was the low, and we came up for 2.5 days all the way to 1900. So the low was 1535 on Friday, and then went all the way up to just under 1900, 1895, and then we've had two big down days to 1625. These are just unprecedented moves up and down. This is just unbelievable. But this is really typical of a high volatility on really a big bottom. After a correction like this, we get this kind of volatility. You also see this kind of volatility on the top of a market. So what I'm looking for tomorrow is to see if we can get us a little bit of a drop, for example, on this particular chart, which is the NASDAQ Composite, 1580, somewhere in there, and then see some sort of reversal, which you'll see on an intraday chart, like a 3-minute chart, or I'd say a 3-minute chart would be about right. Now, with this kind of volatility, and you're doing intraday trades, you can use 1-minute charts with a 1 day of data, and I'll show you in just a second what that looks like. We really don't want to see that this corrects down to Friday's low. The worst kind of chart pattern that we could see would be an example of Amazon.com. They had earnings, it wasn't so great, and they had a bad outlook, and then they were downgraded by various brokerage firms. So this exceeded Friday's low. This is what we do not want to see in the NASDAQ Composite. I'm still sticking with the idea that we saw the low on Friday and that today's overreaction was caused by a couple talking heads, which is Bernanke was the worst culprit. And let's take a look at the intraday chart, what that looked like. Right there is when Bernanke finished, and the stocks, the correction, this is the Dow Jones Industrial Average, was about 9,025. You can see that on the far left and the far right, the price on this chart. This is an E-Trade, a 1-minute chart, 1 day. The stock, the Dow was already down about 175, 180 points, and then it went down another 450 points. Now, this Mitt Romney guy was speaking on the radio today during the market hours on the radio waves, and he was talking about depression if the Democrats get into the White House. That can't be good for the market to hear the D word. So I'm still looking for some sort of a tradable reversal in stocks that will start an upward movement that should last for a lot longer than just a few days. Let's take a look at a few other stocks again. Now, this is Apple Computer. It looks like it has some more downside. If this stock opens up tomorrow and you have it long already, I would think that it has some downside to it, even if it opens up a little bit. And here's Apple's chart today on the intraday charting. This is an intraday chart for a 1-minute, 1 day with E-Trade's charting. Here's Apache Corp, an independent oil and gas stock. Big drop in the last 2 days from yesterday morning's open at $90 all the way down to $64 today. Looking for a little bit of a drop and maybe some sort of tradable rally on this stock, but I'm sounding like a little bit of a broken record the last day or so. These are at least very good for intraday trades, if not a potential hold for an intermediate term trade. All the major oil companies like ExxonMobil here has the same kind of chart pattern. Huge drop and huge volatility for this stock. Really unusual. Here, let's take a look at Chevron Texaco. Same kind of looking chart. Of course, you know, oil hit 73.30 today. That's officially half of the high that we saw this summer, I believe around July 4th, when it hit over $147 a barrel. And here's ConocoPhillips, British Petroleum. Here's U.S. Steel. This is a stock chart that we don't like to see, where we hit a new low today, which is a lower low than we had on Friday last week. So the steel sector really took it in the shorts today. MT, this is Cleveland Cliffs. These are all lower lows. Insurance companies did come down a little bit. Hartford did not, but I know Prudential turned over because I was shorting that as a day trade as well. You're still long these stocks. I still think it's a good probability that these stocks reverse fairly soon. We saw a few of the steel stocks hit the lower lows, but the majority of these stocks probably will start turning around the next day or two, assuming that there's not another piece of bad news that comes on tomorrow. So again, I really think that the selling is way overdone, and this is just irrational fears, kind of the opposite of Greenspan's famous words that he said irrational exuberance in late 1998 when he thought the market continued to move up for another year and a half after he made that comment. But we're just getting overwhelmed by the retail investors calling in their investment companies and mutual funds to sell, and it's just so predictable that they do the worst thing at the worst time. So try to hang in there, and looks like we eventually are going to have some sort of substantial rebound. I'm thinking it'll start this week, if not Friday was the bottom. Here, and we'll talk to you tomorrow.